these big issues will undoubtedly come to the fore. Axel Weber, the chairman of UBS, and of course you spoke to his CEO, Mr. Amotti, in the last 24 hours. He is on the panel and he's very forthright in his concerns about negative rates as well. Georgieva, the head of the IMF, the incoming head of the IMF, taken over from Madame Lagarde, of course. She will be on the panel, so a whole host of these multilateral issues will be raised as well. Sajid Javid, I mean, the UK Chancellor of the Exchequer has promised to open the fiscal tap. So I think that's quite extraordinary as well. And the aforementioned Stephen Mnuchin as well, the US Treasury Secretary. So a fascinating cast.
It's interesting, the conversations that I've had the last couple of days, and I'm sure you, Geoff, Karen as well, you know, most people here seem relatively optimistic about the outlook this year because they do see that détente happening. They do think that the so-called signing of this phase one deal between US and China, at least for the time being, removes some element of uncertainty. If uncertainty creeps back into the equation again, then financial markets here really will have to have a day of reckoning because there's a lot of complacency out there. Many people are optimistic. Rewind back 12 months ago, and the outlook wasn't as positive as it seems to be right now.
I think you make some very valid points. I think the market valuations have gone to record levels, not only in the US, but also on this side of the Atlantic as well. Big concerns about, I can just hear Geoff in my ear sorting his preamble on the speech as well. But we'll come to him in a few moments' time when he introduces his panel as well. But as you say, valuations extremely high at the moment. Debt levels around the globe are at record levels as well. And if things were as good as people say, then why do we have the Chinese cutting the RRR? Why do we have negative interest rates still pervading at central banks? Why do we have the money being pumped into the repo market in the last few months or so? So there's a few questions. If things are as good as people say that they are, then we are still in crisis measures in terms of the amount of QE in the system and negative rates as well.
The big question is are we organically good or are we artificially good? And artificially as in, are all of these markets being propped up by the abundance of liquidity out there, the abundance of monetary accommodation? Look at the Fed last year. Exactly 12 months ago, we were on the heels of that December hike. Markets were completely rattled by it. A few months later, back in July, they started cutting, and then they ended up cutting 3 times, and all of a sudden financial markets were okay with it. So it does tell you the huge role that central banks still have to play in this environment in keeping the
And I just spoke to the head of the Swiss Bankers Association, Herbert Scheid, who is also the chairman of Fontobel, and he said to me he believes that 10% of European companies would not be in existence if indeed we didn't have negative rates, propping up zombie institutions. So quite extraordinary there. Right, we've talked long enough, and as you can see on the left-hand side of your screen, Geoff is getting ready now to introduce his panel. I'd say Axel Weber, Mrs. Georgieva, Sajid Javid, and Stephen Mnuchin, all sitting down with Geoff on the future of finance.
So a very warm welcome, everybody, to this CNBC television event. We have a large audience in the room, as well as our panelists, and of course you, our global audience, and you are all very welcome here to our discussion on the future of financial markets. Let me introduce our panelists to you and set the tone for the next hour. IMF Managing Director Kristalina Georgieva joins us. Very nice to have you with us here at this event. Just as the IMF, of course, suggests that we might see a little bit of weaker growth for full year 2020. We will discuss that. US Treasury Secretary Stephen Mnuchin, who joins us fresh from a breakfast with the President. Good morning to you, and thank you for joining us. And I guess it's idle sort of speculation, but it may be important. Was it a continental breakfast, an American breakfast, or an English breakfast?
We're going to call it an American breakfast for a lot of reasons.
Okay. All right. Well, I think that English is the best. We haven't even got to you, Sajid Javid, so you just hold your fire. We'll be there in just a moment. UBS Chairman of the Board, Axel Weber, joins us. A particular insight, of course, as we all know, into the actions of central banks. As a former central banker, thank you so much for being with us on the panel. And let's talk about UK Chancellor Sajid Javid, who you've already heard from Some reports that he wasn't going to make the panel because he was already headed down the mountain. We're pleased that those reports were untrue. We're also pleased that he managed to bust Boris's ban from being here in Davos. So you are very welcome.
Thank you
very much for coming and drinking champagne with the billionaires here at the World Economic Forum. So let's kick off our conversation here. Secretary, if I could just start with you, because you've just come out of an important breakfast, and I think there are a lot of issues on the table for financial markets that we'd like answers to. It's taken 22 months to get a phase one agreement with the People's Republic of China. We now have a deal. Is it possible to conclude phase two before the US elections take place?
Well, let me first say it's great to be back in Davos, and it's great to have the president here really talking about what is the great economic performance of the U.S. economy and the great outlook that we have. The China deal, we couldn't be more pleased. This week we signed the phase one agreement. It is a very significant agreement, including issues on forced technology transfer, agricultural structural issues, financial services, currencies, purchases. And we also concluded the U.S.-Mexico-Canada agreement. So this was a great week for trade agreements. As it relates to phase two, I would say there's no deadlines. So the first issue we're very focused on the next 30 days is implementing phase one. There's also, as part of this, a real implementation office as part of enforcement. And we'll start on phase two. If we get that done before the election, great. If it takes longer, that's fine.
So 22 months is not a relevant number in terms of targets and agendas.
I think we dealt with a lot of the important issues in phase one and things that we've never dealt with before, and I think that gives us a great advance into phase two. But whether we get it done or not, I just think the combination of phase one and the combination of the USMCA, and I know we're very much looking forward to a new trade agreement with the UK. That's a big priority of ours for this year. I was pleased to see that you said you'd do us and Europe at the same time. I was a little disappointed. I thought we'd go first. They may be a little harder to deal with than we are anyway. But a lot of good things for 2020.
And can you clarify for our audience just the position on tariffs? Because it appears that you are reluctant at this stage to relieve pressure on the Chinese with regard to tariffs. So tariffs continue up to a phase two agreement and beyond.
There's no question that the president's tariffs have been a big incentive in all these trade agreements. So whether you like tariffs or you don't like tariffs, we wouldn't have these trade agreements without either actual tariffs or the threats of tariffs. The president has said if we get all of phase two done, he will remove the tariffs. We could easily have phase 2A, 2B, 2C. It doesn't need to be a big bang, and we'll take tariffs off along the way. So they're a big incentive for the Chinese to continue to negotiate to conclude various additional parts of the agreement.
Managing Director, the consequence of this disagreement have been a reduction of over 11% worth of bilateral trade between the United States and China. But as we know, it's also had an impact on stalling global trade in some areas as well. How do you feel about the possibility or risk for the global economy that we have another decline in those trade relationships because they're negotiating? The two big boys in the room are fighting and the rest of the world takes the pain.
It is very good that there is now truce and a pathway to peace. And it has been reflected in how the outlook for the world economy is presented today vis-a-vis a couple of months ago. We are in a better place for three reasons. One is the signing of phase one, which has reduced by 0.3% what would have been a cost on the world economy. Two is very important, the fact that central banks have been pursuing accommodative policy in a synchronized manner. We had 49 central banks cutting interest rates 71 times, and the result is 0.5 percentage point boost to global growth for last year and for this year, for 2020. So last year, we ended up with 2.9% growth, would have been less than 2.5, which by the judgment of the IMF means recession. So we have avoided that. Of course, central banks, many of them are running out of space, not US, but many others are in a tougher place. That has helped. And three, what we see is finally bottoming out in trade and industrial output. Now, you started by saying the IMF is not so rosy about next year, this year and next year. True, we have reduced our forecast from 3.4% to 3.3%, but it is only because of India, the main reason for downgrade, and because of unrest in a couple of countries. The rest of the world looks better today than it did in October.
Let me come back to the central banks, because I think we can spend a bit more time on that topic. But I just want to finish where we are on the trade story here. You have said in the past that the effects of this trade dispute could last a generation. There could be broken supply chain impacts going forward and a reshuffling of the way the world does its business. You seem to be edging back from that a little bit now. Is that because we're making progress?
I think we do have a piece of good news, and as the Secretary said, there is already initiation of phase 2. I had a meeting with Vice Premier Liu He, who tells me in a very determined manner that China is engaging on the implementation of phase 1 very seriously and on phase 2 very seriously. So this is a piece of good news. As I said, trade truce is not the same as trade peace. Trade peace is what we should be aiming for. We do have a better outlook on trade, and it is demonstrably in the numbers of trade finally bottoming out. Let's remember, last year was a very sad year for trade. Trade growth was 1.4%, lower than economic growth is very unusual. Now we are seeing trade picking up. Is that good enough? Obviously not. If our projections for global growth are meager, because 3.3% this year, 3.4% next year, this is anemic growth. Part of it is because these issues are not totally sorted out. We will be continuing to advocate for unleashing the power of trade, because historically we know trade is good for growth, it is good for jobs, and it is good for the low-income people in all countries.
You have characterized the risk as one of creating a digital Berlin Wall. That's something coming from your background. Secretary Mnuchin, do you recognize that as a potential outcome if you and the Chinese are unable to find a meeting of minds on issues like Huawei and IP theft and the future for the internet?
No, I discard that. So, I mean, let me be clear. You know, words like trade, peace, trade, war, things like that, those to me are not the right words, in all due respect. To me, it's about free, fair, and balanced trade. So what the U.S. is one of the largest trading markets in the world. If we can get free and fair and balanced trade with China and our other partners, this is good for us, good for them. It's one of the single biggest opportunities for American workers, for American companies. There's a huge growing middle class in China, 400 million people. It'll be good for them and good for us. So what we're trying to do is break down barriers to trade, which do exist. And I think most people know the U.S. is the most open market for trade, the most open market for investment. We want to have those same opportunities around the world. And again, we look forward to very much with the U.K. I think two big markets for goods and services. We're looking forward to tremendous growth with the UK and the US. So it's not a Berlin Wall at all. It's we want other people to take down the Berlin Walls.
I'll come back to you in just a moment, Managing Director. I know we're short of time, so I want to make sure everybody gets a chance to speak. Chancellor, if I could bring you in. Obviously, we've just heard from the President directly. My colleague, Joe Kernan, has just interviewed him, and he said, quote, the UK trade deal, we've already started negotiating. Can the UK actually sign a deal and sew up a deal ahead of settling the ledger with the EU?
Well, first of all, thank you very much for having me on your panel. But we are passionate believers in free trade. The UK has been for a long time. And I agree very much with what Kristalina just said about more free trade around the world is good for everyone, but especially for those on lower incomes. And we see more free trade as a way to lower consumer prices and get more growth and more jobs in the UK and those countries we partner with as well. And in terms of our sort of next steps on free trade, of course, one of the big ones is with our European friends and partners, getting that new comprehensive free trade agreement where the principles have been agreed, but there's still a lot of work to be done, and that's off to a good start. But also with the US, as the Secretary has said, the work, we've already started work, and we are working closely together, but that is a huge priority for us as well. I mean, having a free trade agreement between the sixth largest economy in the world and the largest economy in the world is going to benefit all our consumers in terms of jobs, prices. It's hugely important.
So the timing was the question. Can it be done before you settle the account with the EU? I just spoke with the Vice President of Spain, who tells me that she met you recently, and you talked optimistically about your time frame. Most senior politicians in the EU seem to think that you're living on another planet when it comes to getting a comprehensive deal wrapped up before the end of the year. Could you take that question and also
in terms of trade, our first priority is, of course, getting the agreement with the EU, because as we now leave, we'll be leaving in 9 days, with a deal, but of course still to do the trade agreement. And we have, yes, we've set a timetable. It's the end of this year, but it can absolutely be done. And I've had a number of discussions myself with my European colleagues, a number of them yesterday, for example, and there is a strong belief on both sides it can be done. Both sides recognize, of course, that it's a tight timetable. A lot needs to be put together in the time that we have, but it can be done, and it can be done for both goods, where we want to see free trade with zero tariffs, zero quotas, but also on services.
Axel Weber, could you give us a business perspective here? How well received was phase one by the banking and the financial community? What impact already are you seeing in terms of the unleashing of animal spirits to take advantage of a Trump bump or a Boris bump, as it's so been described?
Well, I think phase one deal was a welcome break for the markets. It's not a breakthrough, because phase two is going to be more important. So in a way, what we look at is basically what has been the impact of what is in the pipeline. And we expect a bit of an air pocket for US growth in the first half of the year, largely because if you look at September tariffed imports, they're down 30%. There is a fading stimulus from, the very welcome tax policies that we've seen implemented by the Trump administration. The Fed has reacted to the disconnect between the policymakers and the market, so to say, and adjusted to what the markets have expected. The Fed's on standby rather than on hold, which is a subtle but important difference. And so the central banks have been coming to the rescue almost over every of the past downturns, including some financial market corrections where the central banks were nervous about financial stability issues, but actually there wasn't a real threat for the underlying economy. So where do we stand? I think this really, the whole trade universe is being renegotiated. And for me, what is important is that we don't lose the benefits of fair trade around the globe, that if we dial back global exchange of goods and services, which was a major force behind the surgence of growth over the last 10, 20 years, we're going to see some headwinds that will be more structural and long-term. So I think everyone is knowledgeable of that. In terms of the agreement, EU versus European Union, look, it's hardly a surprise after 3 years that the UK is leaving. This is not an issue where time is helpful actually time pressure is helpful. And so I think keeping the time pressure on to get a deal is going to be important.
In the autumn, you talked about there being an investor strike because of the combined issues of trade and Brexit. Is that strike over?
I think for the UK, there's a lot of expectation that now the new government has the majority it needs, so whatever it negotiates in Brussels, it can get done at home, which was a big concern before. Direction is also clear, and that, you know, markets always suffer and have a hard time when direction is unclear and people are taking directional bets. This is much clearer. This is gradual. And I think the UK will get a new agreement with the European Union, but it's not going to be a status quo preserving agreement. It's a phase-out agreement. And for phase out, you know, one option is to phase it out in stages, and that's a likely option that you're going to take. You not move everything to the new world on the same point in time. And so I'm very optimistic that because it's in the interest of both parties to come to a conclusion, like it was for the US deal, that we will see a deal done. It might not really tick all the boxes for everyone, but it's largely reassured the market. And some of the investor strike for the UK, in my view, where people waited for the ultimate resolution, we're seeing that disappear. We're seeing investments being made in the UK. People are coming off the sideline. People are putting money at work again. And actually, that's going to be very good for the UK economy.
Chancellor, briefly.
I'm just going to add to that. We've seen a huge boost in investor confidence in the last few weeks because of the UK election result. And that result meant a removal of what you might call a double whammy of risk. There was the risk of effectively a Marxist agenda for government. That was the proposal from the Labour Party in the UK, probably the most anti-business sort of manifesto for government that's been seen in modern times. And that would have been a disaster for the British economy and disaster for working people in the UK. And that has been removed, and that's been a welcome boost for business, but also the certainty around Brexit, the knowledge that with our majority, the biggest majority since Tony Blair's time, it means there's political stability, which means economic stability. So the decisions we make on Brexit, that the negotiations we do with our European friends, they can be certain that they will put into European law quickly.
But you've said that Brexit won't be a boost for all businesses. Some businesses may not benefit. You've said that. And also the alignment of regulations and rules that the UK seems to insist on departing from. You've also implied that not everybody will benefit from that. So it's not a universal win, is it, for British business?
What I've said is that Brexit will be a change. We've had this relationship with the EU, a lot of economic integration for over 40 years. And of course, as we leave, there's bound to be change. But we've also been clear that there's no point in leaving the EU and then sticking with all its rules and regulations forever. We're leaving the EU, which means we're leaving its single market, we're leaving its customs union. That does mean we will not be a rule taker, but at the same time, it's really important that it's understood that we are and will be one of the most pro-business governments the UK has ever seen, a government that believes passionately in the importance of business to generate the wealth that we need to pay for public services. That means low taxes, sensible regulation, free trade agreements, not just with the UK, but with the US and many others. And that's going to be, in the long term, that'll be a major boost to the UK economy.
Secretary, if I can bring you back in here, one area I think where there is some disagreement, and let's see how this gets resolved. 22 months to do a trade deal with the Chinese, a conversation between President Trump and President Macron to get a volte-face on the French introduction of a digital tax. The UK says it's going to plough ahead with its own plan in April. Can they get a trade deal with you if they insist on introducing a digital tax in April?
We'll be having some private conversations about that we don't need to have on TV.
No, please do. Please do.
I've made some comments on this already, and we'll be having some private conversations. And I'm sure the President and Boris will be speaking on it as well. As the president did with Macron.
But this is a principled issue for you and for the American government, it seems. You just don't want foreign governments and countries imposing taxes on your digital industry willy-nilly.
No, the willy-nilly is the important part. I think we've been pretty clear that we think that the digital tax is discriminatory in nature. There's an OECD process that we're participating in. International tax issues are very complicated. They take long times to look at. And, if people want to just arbitrarily put taxes on our digital companies, we'll consider arbitrarily putting taxes on car companies.
So I take away from that if the tax is imposed in April, UK industry can expect some reciprocal tariffs. Is that a fair assessment?
We're going to have some private conversations. I'm sure this will be worked out, if not at our level, between the Prime Minister and the President, who have an excellent relationship.
But there's a very clear threat there, given what you just said about the European auto industry.
Again, I want to just be clear. I think this is an important issue that we'll deal with. But going back to, let me just say, the more important stuff, let's not get sidetracked on...
Well, this is important for the markets. They will be worried.
I don't think the markets are worried about this. I think the markets are very focused on two gigantic trade deals that the U.S. just did. Again, I think phase one is very, very important to the U.S. and to China. I think the USMCA is very important. And again, getting this trading relationship with the UK will be fabulous for us and for them. And, we'll also be having trade conversations with the EU. Those started yesterday in a bilat. That's going to be a focus of this year as well. So there's still a lot to do on the trade front. And by the way, I think we're going to see on the U.S. economy very positive impacts of this in 2020.
Just for a moment, it's always interesting to bring in our Davos audience here. So let me just do this for a moment. If I could just, I think you're all very well aware of the issues on the table. If I could just get a hand vote on a universal digital tax. Does the room think it is a good idea for many of these American technology companies to pay a digital tax? Please put your hand up if you agree with that premise. Okay, I would say that's
a minority
about a fifth
of the room.
I agree.
Just to be clear,
I agree.
I was worried that you stacked the room, but I think that was a very fair vote. The super majority of people agree with us.
I think you've got them worried. All this talk about taking people away for a little conversation in other places has got them a bit nervous. Put your hand up then if you don't think it's a good idea to see the imposition of this tax. Let's see how this one goes.
I'm watching.
I think you may have just carried it just slightly, but I wouldn't say there was a majority in the room for one way or the other. Managing Director, let me come back to you on this because you have really put a stake in the ground on this issue of taxes being paid properly in the appropriate circumstances. Share with us your view here. Is it ultimately necessary for there to be a digital tax universally rolled out with the support and the involvement of the OECD?
Before I get there, just to say to the Secretary that this is what happens when you have a woman on a panel. We talk about peace. Now to go to your tax, to the tax issue. I agree with the Secretary that there is a process underway that is an encouraging process on the question of a digital tax. And it is, I think, much better for businesses to have predictability that what is going to be in place is going to be respected by everybody. We do believe that...
Well, we're just going to take a moment out of Geoff's panel to recap on some of the quite extraordinary lines we've already heard. We've heard, of course, from Steve Mnuchin, the US Treasury Secretary. He was very relaxed to start off with on the timing of a phase 2 deal. In answer to Geoff's questioning, he was saying, look, we could get a deal done before the US election. We can get a deal done post the US election. We are not troubled by a time frame dominated by the presidential election in the United States. He said there are a lot of good things to look forward to in 2020. He referred to the Mexico-Canada agreement and, of course, prospects potentially for talks leading to a UK deal. On the prospect of a UK deal, the UK Chancellor of the Exchequer, Sajid Javid, was asked, could deals happen concurrently? And yes, the US is very keen on starting negotiations with the US, but said, obviously, the priority is to seal a deal with the EU first. And very interesting to listen to Georgieva, who was saying also a trade truce is not a trade peace as well. But with that, we are now going to leave programming for the moment and go to Squawk Box, which begins right now.
The global elite are here in Davos for the annual gathering of the World Economic Forum. Today, Joe Kernan's interview with President Trump about the economy, the stock market, and matters important to your money. It's Wednesday, January 22nd, and the special Forex begins right now.